At the same time, inflation is expected to rise. These comments coming in a speech here in Washington by IMF Managing Director Kristalina Georgieva ahead of the IMF's brand new World Economic Outlook due out next Tuesday, the first to include the impact of President Trump's tariffs. Now, risk of stress in financial markets. She warned that the depreciation.
Here's the thing nobody wants to admit. The IMF and the World Bank don't care about your meme coins, they don't care about your overnight 100x gamble, and they sure as hell don't care about who's trending on Twitter. Their job isn't to play the casino, it's to build rails for entire nations. And when you start looking at it through that lens, suddenly it becomes obvious why blockchains like Stellar and Hedera start looking way more attractive than Ethereum or Solana or whatever the hype of the week is. Think about it. If you're the IMF, you're not sitting there wondering how to ape into some DeFi farm. You're asking, can this network move billions across borders without breaking? Can it support a digital bond issuance for a struggling nation without collapsing the moment gas fees spike? Can it comply with AML rules, KYC standards, and actually integrate with the banking system? Those are boring questions if you're a retail trader, but for institutions, they're life and death. Ethereum is great, don't get me wrong. It birthed DeFi, NFTs, smart contracts, all of it. But the IMF doesn't want a network where one bored whale can pay $150 gas just to mint a meme and clog the system for everyone else. They don't want a system that forks every few years or has constant debates about scaling. They need stability. They need predictability. And honestly, they need control. That's where Stellar and Hedera come in. Now, let's talk about Solana for a second because I know people are going to bring it up. Solana has speed, Solana has adoption, Solana has hype. But it also has outages, centralized choke points, and let's be real, it's still the Wild West. The IMF doesn't want the Wild West. They don't want to wake up one morning and see the entire network went down for 12 hours because of validator overload. That doesn't cut it when you're trying to settle cross-border payments for hundreds of millions of people. Instead, what the IMF and World Bank want are rails they can depend on, rails that don't just work for the retail investor in California but also for the remittance worker in Nigeria, the microfinance program in Bangladesh, or the sovereign debt project in El Salvador. This is where Stellar and Hedera stand apart. Stellar was literally designed for cross-border payments. Its core mission from day one was financial inclusion. Low cost, high speed, with partnerships that reach straight into money transmitters like MoneyGram, Stellar has been positioning itself as the humanitarian rail, the payment rail for the unbanked and the underserved. That language fits perfectly with the World Bank's sustainable development goals, cutting remittance costs, expanding financial access, connecting emerging markets to the digital economy. If you're sitting in Washington at the IMF or the World Bank, Stellar sounds less like a crypto gamble and more like a tool to achieve policy. Then you've got Hedera. Now this is where it gets interesting because Hedera doesn't just sell speed or cheap transactions, it sells governance. Real, big-name, Fortune 500, global bank, global institution governance. The World Bank doesn't want to run infrastructure on a chain where anonymous validators are arguing in a Discord. They want IBM. They want Google. They want Standard Bank of South Africa. They want networks that are run by institutions that can be held accountable. That's Hedera. And here's another big one, energy. The IMF and World Bank are obsessed with climate. Carbon neutrality, sustainability, ESG, these aren't just buzzwords for them, they're funding priorities. Guess which two networks have made sustainability a centerpiece? Stellar and Hedera. Hedera is literally carbon negative, and Stellar has been proving it can scale payments without the environmental baggage of proof of work. Compare that to Bitcoin, which the IMF criticizes regularly, or Ethereum, which even after proof of stake still draws scrutiny when energy debates heat up. So the question becomes, if you're the IMF or the World Bank, which rails do you trust to issue a digital bond? To run a cross-border settlement layer? To connect with remittance companies and microfinance programs? Do you really want to bet that on Ethereum, where a gas spike can wreck an entire program? Or Solana, where an outage could kill a pilot overnight? Or do you pick Stellar, already used by the UN for aid distribution pilots? Do you pick Hedera, already governing tokenization pilots with regulated banks? It's not even about speculation, it's about fit. Institutions don't need the most hyped coin, They need the most reliable rails. And right now, when you strip away the noise, Stellar and Hedera are the ones that check the boxes. But here's the kicker most people miss. The IMF and World Bank are never going to come out and say, we endorse Stellar or we endorse Hedera. They're going to hide it behind pilots, partnerships, and carefully worded reports. They'll talk about distributed ledger technology instead of naming names. But if you read between the lines, if you look at who's running pilots, who's sitting on governance councils, who's powering remittances, you start to see the fingerprints. And that's what the 3% understand. They know not to listen to what's being said in press releases. They watch what's being built, who's investing, who's integrating. They connect the dots between World Bank white papers, IMF reports, and the quiet partnerships being announced by Stellar Development Foundation or Hedera Governing Council members. That's why I keep saying the game isn't to gamble. The game is to watch the rails. And if you're watching the rails, you know exactly why the IMF and the World Bank are circling Stellar and Hedera while retail keeps chasing noise. If there's one network that was practically built to sit in front of the IMF and World Bank, it's Stellar. Not because it's flashy, not because it's hyped, but because it solves boring problems that actually matter. And let me tell you, boring is good when you're talking about institutions. They don't want surprises. They want rails that move money efficiently, transparently, and compliantly. Stellar has been hammering away at one mission since its inception: cross-border payments and financial inclusion. That's not just a tagline. It's literally what the World Bank has been shouting about for years. One of their stated goals is to cut the average global remittance cost from around 6% down to under 3%. Guess which network is already enabling transactions that cost a fraction of a cent? Stellar. Look at the partnerships. MoneyGram is the big one everybody knows. By linking Stellar's blockchain to MoneyGram's massive remittance infrastructure, suddenly you've got a global network where someone in the Philippines, Nigeria, or Mexico can receive digital dollars in near real time and cash them out locally. That's not theoretical, that's live. And it aligns perfectly with what the IMF and World Bank always emphasize: improving remittance flows and lowering transaction costs for developing nations. But it goes deeper than remittances. Stellar's anchor model, where regulated financial institutions serve as gateways, makes it institution-friendly. It's not just a free-for-all like some DeFi protocol. It's structured to allow compliance, KYC, and integration with existing finance. That's exactly the kind of framework the World Bank looks for when running pilots in emerging economies. And don't forget aid distribution. The UN has already piloted Stellar for humanitarian aid, sending digital vouchers that can be redeemed for food and services. Think about that. Global NGOs and aid agencies already trust Stellar to deliver value directly to vulnerable populations. That's not hype, that's impact. And it's exactly the kind of use case the IMF and World Bank highlight in their reports when they talk about leveraging technology to improve financial access. Now, here's the kicker. Stellar doesn't just fit the financial inclusion narrative, it's also cheap, scalable, and sustainable. A single Stellar transaction costs less than a cent and settles in seconds. You don't have to worry about gas wars or congested mempools. And when the IMF is busy warning countries about energy-intensive networks, Stellar's lightweight consensus looks like a dream come true. So when you put it all together, remittance alignment, aid distribution pilots, regulatory-friendly structure, cost efficiency, it's not hard to see why Stellar is in the conversation. Maybe the IMF won't say it out loud, but if they want rails that actually work for global finance, Stellar is already proving it can carry the load. When you zoom out and look at the blockchain landscape, you realize something. Not all networks were built with institutions in mind. Some are fast but lack compliance. Others are secure but inefficient. Very few can tick the boxes that international bodies like the IMF or World Bank care about: governance, stability, efficiency, sustainability. This is where Hedera stands out in a way that feels almost tailor-made for the next wave of global finance. Let's start with governance, because that's the first thing any IMF or World Bank working group will examine. Who's in charge? Who keeps the system stable? With Hedera, you don't have to squint or hope for decentralization. It's right there in the open. The Hedera Governing Council is composed of blue-chip organizations: Google, IBM, Boeing, Standard Bank, Nomura, and many more, each with equal say and fixed-term limits. These aren't anonymous validators. They're recognizable names with reputations on the line. If you're pitching blockchain rails to global institutions, that council structure is the kind of bulletproof governance model that builds trust. Compare that to networks where decisions are driven by a handful of whales, and you see why Hedera appeals to serious policymakers. Now let's talk about speed and cost. Hedera runs on Hashgraph, a consensus mechanism that can process over 10,000 transactions per second with near-instant finality. Each transaction costs a fraction of a cent, and it's predictable, no gas wars, no wild spikes like you see on Ethereum. For the IMF or World Bank, that kind of stability is key. They can't recommend or build systems on rails that could suddenly become unaffordable when the network gets congested. Hedera provides the kind of consistent throughput and pricing that institutional-grade systems demand. Sustainability is another critical factor. These institutions are laser-focused on climate impacts and environmental goals. The World Bank has entire divisions dedicated to green finance and sustainable infrastructure. So when they evaluate blockchain networks, proof-of-work chains are basically non-starters. Hedera shines here. It's carbon negative, energy efficient, and even publicly reports its environmental offsets. That positions Hedera as the ESG-friendly blockchain, a factor that gives it a unique edge when global organizations are looking to adopt digital rails that align with their sustainability pledges. But it's not just about ticking compliance boxes, it's about what Hedera is actually being used for today. Take payments and settlement. Hedera is powering micropayments, real-time settlement, and tokenization projects at scale. The network has been used to tokenize carbon credits, creating transparent, verifiable markets for sustainability assets. That lines up perfectly with the IMF and World Bank's interest in creating efficient markets for climate finance, where transparency and auditability are non-negotiable. Even more compelling is Hedera's work with central bank digital currencies, CBDCs. We've already seen Hedera engaged in pilots and partnerships around stablecoins and CBDCs. One example is its partnership with Shinhan Bank in South Korea, where Hedera is being explored for cross-border stablecoin transactions. The World Bank has been vocal about the need for CBDCs to interoperate across borders, and here's Hedera actually demonstrating that capability. It's a real-world application that could feed directly into the IMF's research on multi-CBDC platforms, what they call mBridge, for instance. And don't overlook Hedera's real-time settlement features. The IMF has criticized the inefficiency of current correspondent banking systems for years. It takes days to settle cross-border payments, with high costs and opaque processes. Hedera's ability to provide finality in seconds, combined with tokenized assets, could be exactly what the IMF points to when it talks about the future of payments infrastructure. Now let's draw the bridge to Stellar. Stellar is already deeply entrenched in the remittance and financial inclusion narrative. It's the people's rail, helping migrants send money home, enabling aid agencies to deliver relief, empowering emerging economies. Hedera complements that with the institutional-grade backbone, governance, enterprise adoption, carbon-negative infrastructure, CBDC pilots. Together, they create a one-two punch that covers the full spectrum of what the IMF and World Bank care about. Accessibility at the grassroots level, Stellar, and stability at the institutional level, Hedera. Imagine a global payment system where Stellar handles last-mile remittances, getting funds directly into the hands of families, aid recipients, or small businesses, while Hedera powers the wholesale layer, settling between banks, managing tokenized assets, enabling CBDCs, and ensuring auditability. That's not just speculative. It's a vision that maps directly to problems international institutions are already trying to solve. And the beauty is, both Stellar and Hedera are already moving in these directions independently. Stellar is tied to MoneyGram, UN pilots, and remittance corridors. Hedera is tied to banks, enterprises, and sustainable finance. The IMF and World Bank don't need to imagine what's possible. These are live, working networks proving the model right now. So when you ask why Hedera matters in this conversation, it's simple. It provides the credibility, stability, and infrastructure backbone that global organizations can actually adopt. It's not just another altcoin chasing speculative hype. It's a network designed with the kinds of features that policymakers, regulators, and financial institutions demand. Pair that with Stellar's grassroots use cases, and suddenly you have the complete package. A bottom-up and top-down solution for modernizing the global financial system. That's why if you're holding HBAR or XLM, you're not just betting on price pumps. You're aligned with the same themes the IMF and World Bank are discussing behind closed doors. That's not hype. That's a strategic position for the next decade of global finance. When you connect all the dots, the picture becomes clear. Stellar and Hedera are not competing for the same space. They are building complementary pillars of the next global financial system. Stellar has carved out its role as the people's network, creating real-world solutions for remittances, aid distribution, and financial inclusion. It is the bridge that brings individuals, small businesses, and vulnerable populations into the digital economy. Hedera, meanwhile, has become the institutional counterweight. Its governance by leading enterprises, its efficiency, and its sustainability profile all align with the standards that organizations like the IMF and World Bank demand when exploring new financial infrastructure. With its track record in tokenization, CBDC pilots, and climate finance, Hedera provides the credibility and scalability needed at the top level of global finance. Together, XLM and HBAR form a unique synergy. Stellar ensures the last mile is solved, getting value into the hands of people who need it most, while Hedera anchors the wholesale layer, enabling transparent settlement, regulatory compliance, and enterprise adoption. This dual approach directly mirrors the very challenges the IMF and World Bank are working to solve: inclusion and stability. For investors, this is bigger than speculation. Holding XLM and HBAR means positioning yourself in alignment with global megatrends: digital inclusion, sustainable finance, CBDCs, and institutional-grade infrastructure. It's not a question of if, but when, international bodies adopt rails that can serve both grassroots needs and global markets. And when that shift happens, Stellar and Hedera will already be there, tested, proven, and ready to scale.